Howdy, everybody. Welcome to Liberty Call. Today is Thursday, December 7th, 2023. Everybody's having a good day out there. Pretty nice day here in Colorado, but we got some snow coming tomorrow and Saturday. So, yay, that's exciting. According to the forecast, it's going to be enough for the snowblower. So, I'm really excited about that. Anyways, hope you're having a good day. If it is your first time watching Liberty Call, if you could do me a favor. Could you give me some thumbs up, like, share, subscribe, follow, and press the notification bell? I would appreciate it. All right, let's get into today's numbers. Let's see here. Dow Jones was up a little bit, 0.17%, 62 points, closed at 36,117. S&P 500 up 0.8%, closed at 45,85. NASDAQ up 1.37%, closed at 14,339. The VIX was up 0.69% today. It's at 1306. Canada was flat, up 0.02. Brazil was up 0.31, and Mexico was up 0.2%. In Europe, Germany was down 0.16. The UK was down 0.02. France down 0.1%. Netherlands was up 0.02. Spain down 1.09%. Italy down 0.67. Switzerland down 0.3. And Portugal down 1.22. Russian exchanges were mixed. The MOEX down 0.19. The RTSI the RTSI up 0.57. And the Asian markets, the Nikkei in Japan was down 1.77%. Australia down 0.07. In China, the Shanghai was down 0.09. The Shenzhen Component down 0.14. China A50 down 0.15. DJ Shanghai down 0.11. Hang Seng down 0.8. And Taiwan weighted was down 0.47. So looks like Asia and Europe were in the red, and we didn't get the memo today, but it's just been kind of this back and forth. And I mean, earlier today, Fox Business had a chart up showing the returns for the Dow, the S&P, and the NASDAQ for the year. And yeah, they look great. But if you go back to the beginning of 2022, they're still down. Well, at least the Dow and the S&P, I think the Dow was. Let me just check again so I don't say something stupid. Let's see, the Dow. Actually, the Dow's down right now by about 1.6%. The S&P's down about 4 3/4, and the NASDAQ is down about 11%. So that's where things stand right now on those. So, like I said, everyone's excited because those indexes have had a nice rally this year. But last year they sucked, so it's it's kind of a give and take. And until we really get out of this cycle we're in, a boom bust, it's gonna be tough to really tell where things are headed. So, anyways, all right, let's go ahead and move on over to the market recap. Dow ekes out win as Alphabet, AMD rally offsets energy slump. All right, on Thursday, the Dow Jones closed marginally higher with a rally in tech stocks led by Alphabet and AMD, offsetting losses in energy stocks. Alphabet gained over 5% after unveiling its latest AI model, Gemini, a multi-model system that comprehends audio, photos, and video. The move is seen as a strategic effort by Alphabet to compete with rivals OpenAI, Microsoft, and Meta. AMD surged over 9% following the launch of its new AI chip, MI300X, positioning itself against NVIDIA. According to Oppenheimer, AMD's management anticipates the MI300X to outperform NVIDIA's H100 for AI workloads. However, retail-focused favorite C3 AI experienced an almost 11% slump after providing guidance for a full-year adjusted operating loss deeper than it previously forecast. Chewy, an online pet care retailer, saw a nearly 1% decline in its shares as it trimmed its annual sales outlook due to inflationary pressures affecting consumer demand. GameStop shares rose by 10% after announcing a plan to amend its investment policy, allowing the video game retailer to invest in equity securities, overshadowing quarterly results that missed expectations. Investors also awaited the non-farm payrolls report for November, focusing on labor market data. The number of Americans filing for first-time unemployment aid came in at 220,000, a slight increase from the previous week. This data added to the recent indicators of a softening labor market, with economists expecting the economy to have added 180,000 new jobs in November, maintaining an unemployment rate of 3.9%, while average hourly earnings are anticipated to have increased by 0.1%. So everyone just kind of sitting around on their hands waiting to see what the next labor report says. Or I guess the report. Is there a jobs report tomorrow? Yes, I believe so. All right, let's go and get to the Thursday's labor data. U.S. labor market steady slowing. Wholesale inventories are revised down. All right, the U.S. Labor Department's weekly jobless claims report revealed a moderate increase, with new claims rising by 1,000 to reach 220,000 for the week ending December 2nd. This uptick suggests a gradual loss of momentum in the labor market attributed to higher borrowing costs impacting demand in the broader economy. The report also indicated a decline in unemployment rolls in late November after continuing claims had reached a 2-year high earlier in the month. While this mixed report somewhat supports the view that the Federal Reserve may be finished raising interest rates for this cycle, it implies that the financial market's expectations of an interest rate cut in the first quarter of 2024 could be premature. I've been saying that. Economists argue that there is no cumulative deterioration in the labor market significant enough to prompt the Fed to pivot quickly from rate hikes to rate cuts. Remember, it was either last week or earlier this week, we were talking about first they said May of next year, which the May meeting is it's April 30th, May 1st, and then we covered another article even more recent that said March, and the March meeting is March 19th and 20th. So that's less than 3 months away. All right. Economists, the data indicates that the Fed is likely to remain on the sidelines, carefully assessing risks and maintaining a balanced approach. The weekly claims data can be volatile around the holiday season, making it challenging to obtain a clear signal about the labor market. Despite the increase in unemployment claims in several states, the overall levels remain consistent with relatively low layoffs. In addition to the labor market indicators, other economic data, such as a decline in wholesale inventories in October, points to a slowdown in economic activity. Despite market expectations of a potential rate cut, the Fed is expected to maintain its current stance at the upcoming meeting, which is December 12th and 13th. Non-farm payrolls for November are anticipated to show an increase of 180,000 jobs, with the unemployment rate staying at 3.9%. All right, well, let's hope. All right, one last article here. A little good news. This comes from CNN Business. Here's why gas could drop below $3. That's some good news. Let's see what he has to say. The oil market experienced a notable sell-off, causing U.S. crude prices to dip below $70 a barrel for the first time since July. This decline was driven by a combination of factors, including concerns about soft demand in China, a surge in U.S. oil supply, and disappointment over OPEC Plus's recent decision on supply cuts. The market's swift descent raises questions about OPEC Plus's effectiveness in controlling prices, with analysts suggesting that an agreed-upon production cut appears more symbolic than substantive. The drop in oil prices carries significant implications for consumers, particularly in the form of lower gas prices. Even before the recent sell-off, the national average price for regular gas had already fallen to $3.22 a gallon. Still like $4 for diesel, marking an 11-month low and considerable drop from the September peak of $3.88. The latest wave of selling suggests that gas prices may decline further, potentially approaching or falling below the $3 per gallon mark nationally. $1 would be great. The concerns driving the oil market's decline include uncertainties surrounding global demand, especially in China, and the abundance of U.S. oil supply. Additionally, OPEC Plus's credibility is being questioned, as the voluntary nature of production cuts has raised doubts about their effectiveness, despite the potential geopolitical factors that could impact oil prices, such as the Middle East turmoil or disruptions. There is a growing likelihood that U.S. gas prices could see a more pronounced decline, providing relief for consumers. Hey, maybe fill up the Strategic Petroleum Reserve. If prices are going down and we can get gas or oil at lower prices than what they were at its peak, why not? All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.